songs. Hey. Karibu Betty, how are you doing? Yeah, karibuni. I got Patrick Nganga here. We're gonna talk about the life insurance today.
In the house.
In the house. Karibu Nial, that's my schoolmate in Ruru High School. Join in.
Yeah.
Yes.
Karibu sana.
Karibuni. Welcome, guys. You don't want to miss this. We're gonna talk about life insurance here today. Everything you know about life insurance. Everything you want to know.
Everything. Questions.
Yeah.
Questions.
Brenda.
Bring a question.
Karibu. Join in. Thank you for tuning in. Yeah. Why is Paro stealing my spot? I'm envious. I love Pato. Yeah. Thank you, Betty.
You're taking over.
You're on the same spot about like 3 weeks ago. So join in, guys. Yeah. Hey, Niall. Good. Good to see you. Yeah, that's my schoolmate, Ruru High School, way back.
Okay.
Yeah, about, I don't know, I don't want to mention here, but it's quite some time.
Yeah, just about 3 years ago.
It's a long time, All right. Karibu, Viwami, Karibu to the show. Welcome to the Prudentials, Jeremiah, coming to the show. Welcome. Yeah, join you guys. Yeah, we're gonna be talking about life insurance today. I'm here with life insurance agent Patrick Nganga. He's based here in Dallas, Texas.
Yep.
Yeah, karibuni.
Santi.
So we're gonna get started here in a minute. Alrighty, I have Patrick Nganga here. He's a life insurance agent. We're gonna talking about the Karibu Daniel Thuo. Good to see you. We're going to be talking about the life insurance. We're going to try to debunk some of the myths for those people who doesn't have a life insurance. So this is going to be a good show for you to come in here and join us and talk about it. If you have any questions, please add your comments over there. We're going to make sure we read all the comments after the show.
Yes.
So Patrick, can you introduce yourself to the viewers?
Yes. So as you've heard, my name is Patrick Nganga.
Yeah.
I'm a licensed independent insurance agent.
Okay.
And what we do is we help people enroll in health and life insurance. But today we're talking about life insurance. So
yes.
I'm a life insurance agent. I've been in the business since 2004. 2004.
Wow,
do the
that's
math.
quite some time.
Yeah, quite a bit of math.
Yes.
So and we help individuals. We help companies, so if it's a group or a family or just an individual, single person, we're in the business of helping people get protected. Yes.
Oh, so that's good to you. Now, Patu, where are you from? Like, I like asking my guests.
Yeah.
I want to go deep. Where are you from originally in Kenya?
I'm from Kiambu County.
Kiambu. I'm from Kiambu. Yeah, which part of Kiambu?
Kiambu County, Juja.
Oh, Juja.
Real close to JKUAT. So JKUAT is on the other side of the highway. Juja Farm is on the let's see, that would be on the west side.
Oh, okay.
Yeah.
Oh, okay. Pia mimi mtu wa Kiambu, Ndani. Because I went to school there. I went to Ruru High School. It was not too far from Juja.
Okay.
So yeah. What is your expertise? Like you mentioned you're independent life insurance agent.
Right.
Did you go to school? What did you go to school? Where in here, United States?
Yeah. So I went to a school in Oklahoma.
Okay.
I got my bachelor's in the University of Central Oklahoma, and then I got my master's, my MBA from Southern Nazarene University, also in Oklahoma. So I've done my university, my college here in the U.S. in the state of Oklahoma, and then I started working. When I started out, I was a PNC agent. PNC Life and PNC is property and casualty. So I started out by doing home and health insurance, car insurance, life insurance, and then with time I started specializing in one area. Usually if you want to become really good in one area, then you want to take over that one area. So we specialized in health and life, and then Obamacare came. So we took over. We started that got us really busy. But on top of that, when it comes to health and life, life is a big part of your financial protection. And since that's our major topic here today, it has been a passion for me, seeing people protected, seeing people having the coverage that they need to take care of their loved ones in case of any eventuality.
That's good. Today you're hearing from the horse's mouth. He's a person with expertise with life insurance for about 15 years. So my first question is, like, can you explain to our viewers in the layman language, what is life insurance? Somebody who doesn't know what is life insurance.
So life insurance is you would say is a transfer of risk to the insurance company. So George, you're here, you make a living, you feed your family, you take care of your bills, you send money to your relatives, whatever they are. If something happened to you, there'll be a liability, there'll be a gap left by you going, but your life being taken away. So life insurance fills in that gap when it comes to the financial aspect of it. So when you're trying to figure out how much life insurance someone needs, that's when we look at their income, their needs, their debts, and all that. That's part of looking into how much coverage they need. But basically, to answer your question, life insurance is a transfer of risk from you, from your family, onto the insurance company. Let the insurance company handle that, and gives you that peace of mind knowing that in case anything was to happen to you, you're no longer here with us, then you'll be protected. Now, there are many kinds of life insurance, and I'm sure you'll get to that, but that's just the basic the definition of life insurance.
Yeah, transfer of risk. Can you tell us like different type of insurances that we have?
So the major types, the permanent and term. So there's a term, which is like you renting. If you're renting a house or you're renting an apartment, you have a period of time when you're covered, or you have a period of time when you're as long as you're making your rent payment, then you can live in that house, you can live in that apartment. Same thing with the life insurance. The term part of it covers you for the period of time that you're paying the bill. So you could be a 10-year term, 15-year term, 20-year, 30-year term. So it covers you for just that duration of time. Usually the premiums are level. So if you sign up now and you're $40 a month, they're going to be $40 every month for the existence.
It doesn't change.
It does not change.
So that's term.
Right.
Okay.
And then we have the permanent. And then the permanent can be broken down into different kinds. There's the most common ones is the IUL. You have Index Universal Life, Whole Life, Guaranteed Universal Life, GUL. So for that one, it has what is called cash value. So other than you being protected, your life being protected in case of anything happening to you, your beneficiary getting the death benefit, it also gives you cash value. So the money that you're paying every month, a portion of it is growing towards anything that you'd want. You could get it later for many needs.
Is that the one, like, if I die today and I have a mortgage, it's gonna cater for my mortgage? Is that like my wife is gonna be getting the monthly payments that I was paying when I was alive if I die?
Yes.
Is that the same thing?
So all the term and the permanent have one thing in common, that they have the death benefit. If you pass away, then your wife gets a lump sum. In most cases, a lump sum. If your protection was, say, $500,000, she gets $500,000. And then she can use that to pay off the mortgage. Yeah, for the cash value, the permanent one has cash value. So on top of the $500,000, if you had it for a long time, a lot of times the cash value accumulates. You can use that to for many needs. And if you end up passing away and there's some cash value, some plans, not all of them, but some plans, you can grab. You can take some of the cash value and add on to your death benefit, and all that will be given to your beneficiary, to your wife.
Okay, which is kind of both term and permanent insurance. Which one is better in terms of somebody who is, let's say you're single, you don't have any kids. Which one is better? Like somebody who doesn't have any, beneficiary. Like, I'm just here by myself, I don't have anybody. Do you have any? Which one is better than the other one?
Yeah. So. And one thing in the business we say is you can never say one is better than the other one. Every situation is different.
It's different. Yes.
So what we normally try to look at is a person's situation. Single person no dependents, no kids. Maybe they use some money to send to their relatives. They have passion. They have, maybe they do something, to help the less fortunate. Maybe they have a favorite NGO that they help. So everyone usually has something that depends on them one way or another.
Yeah.
So, but we look at every situation in its own uniqueness.
Okay.
So you could find that it's a single person, no dependents or anything, but a cash value plan might work for them because maybe they want to save for retirement using that life insurance. Maybe they want to have some money that they can withdraw later to pay off the house, or maybe for down payment or whatever they want. So every situation is different. We sit down with every person in their own unique way and look at the plan that best fits their situation. And you can also get a married person with many dependents, a lot of people that are relying on him or her, and you can find that a straight term might still be good for them. So every situation is kind of different. The plans, you can't say this plan fits this person, this plan does not fit these people. We look at every situation in its own uniqueness.
But obviously, like permanent, the way you have said, is better. Not like better. It's probably the best option for many people than term, because you want that permanent.
Yes. So for people who want that permanence, people who want to say, I want to be that if I'm 80 years old, I'm 90 years old, I still have some kind of coverage. Then permanent policy would fit them. But you pay more for that. So that's why every situation is different. Some if you invite me and you want me to run some estimates for you, I'll run both a term and a permanent for you, and then you'll say, hey, I want something that will last me until 120 years old. Some people are saying that a person who will live to be 150 years old has already been born.
Yes.
So, someone might want a plan that would last until they're 150 years old. And, there are plans for that. So every situation, we just look at it, and whatever fits you, all our main job is to educate you, to show what options you qualify for. Then you kind of figure out what's best for you.
Being a life insurance agent, let's debunk some myths. Because I think, obviously, life insurance, like in our culture, it comes with some myths. Can you try to debunk some of the myths like we might have for the life insurance? If you will.
Oh yeah, absolutely. One of the biggest ones is that people claim that if I get life insurance, I'm going to die.
Yes.
Because you're calling death on yourself. That's why you're getting insured.
It's about like a karma.
It's a karma. But that's not the case because when you buy insurance on your car, it doesn't mean you're calling an accident to come to you.
Exactly.
When you buy insurance on your home, it doesn't mean you're calling a disaster to come to you. A tornado, flood, or a fire. So that's one of the major ones that people have, is that if I buy life insurance, then I'm calling death to myself. But that's not the case. You can use life insurance for many. Again, like we say, there's a permanent plan that you can sign up in hope that the money you're putting in accumulates. So you're not really buying it for the death, just for the death benefit, but your also money is growing. By the way, the money grows tax-free. You can withdraw it tax-free.
So it's tax-free.
Yeah, it's tax-free.
Wow.
and the beneficiary gets when you pass away, the beneficiary gets the money tax-free. Unlike just a quick quip, unlike your 401k that grows, you get taxed on the money when it's time to withdraw it.
Yes, you get a
penalty. You get a penalty if you withdraw it before your retirement age. But life insurance, you can withdraw the cash value, not get penalized if you do it the right way. You can pull up that money for whatever need. You could use it for a down payment. You can use it for your kids' education. There are many reasons why you get life insurance. So that's one of the myths that needs to be debunked. So anyone that is thinking that if they get life insurance they'll pass away, forget that.
So that's a myth debunked. You're not gonna die. Yes.
And then another big one. Another big one is the price. People say it's too expensive, or if I get 500,000, then it's going to cost me boatloads of money. But that's not the case. Statistics show that vast majority of people don't get life insurance because they think it's expensive.
Yes.
But when you run the numbers for them, it ends up being
really cheap.
Exactly. It's really affordable.
Yeah. So that's good. I have had this myth. People say the best time to get a life insurance is when I turn 30 or 40. When is the best time to get a life insurance?
The best time to get life insurance is now. I mean, what we normally say is that this is the youngest you'll ever be.
Yes.
Life insurance is cheapest. It's more affordable when you're young. When you're young. So, tomorrow you're going to be a day older. Next year you're going to be a year older, so it's going to cost you more. So the best time to get it is now, when you're still young. Lock in the low rates. Once you have the low rates locked in, then you can still end up paying it even when you get older. You know, I can't tell you how many people call me when they're in their 60s, their 70s. Then when you give them the rates,
it's like, oh, yeah, astonishing. Yeah,
astonishing.
It's crazy. Yeah,
it's crazy. It doesn't mean they shouldn't get it. They can still qualify. There are many options that they can get. It's just that when you get it when you're younger, when you're in your 20s, when you're in your 30s, then it's much affordable for you, much cheaper, and you have more time. If you're getting a cash value plan, you have more time to let the money grow.
Okay, let's talk about the beneficiaries. There are some people here who are single. They don't have the families here. What are the best ways, or for instance, like, how are the family members in Kenya be able to claim your life insurance if they're in Kenya and you live in the United States?
Yes. So you can put them as beneficiaries even when they're in Kenya. List them as beneficiaries. List their information down. List their email address. List their phone number. In case you end up passing away, then the insurance company will contact them and send them the check. So whatever they are, they can still be beneficiaries. So someone should not say, I have to get a beneficiary who's in the U.S. No.
Okay.
The insurance company will worldwide. Whatever your beneficiary is, they'll send the payment to them. As long as you're protected here.
So even if it's your mom or your brother or your siblings, so it's good to put them as a beneficiary.
Yes.
And is it okay to put my child, I have like 6 and 7, to put them as a beneficiary for my life insurance?
You can do that, although it's always recommended to put someone who's of majority age, so that at least if something happens before they are of the right age, then they can be able to help them spend that money. Because if they are 10, 12 or below that, or even below anything below 18, yes, they can get the money given to them, but chances are they probably don't have a bank account, they don't have a proper way of accessing those funds, and proper way of spending it, paying off your debts, paying off your mortgage, and the like.
Okay, there are some other instances like people that die here, they never disclose to anybody whether they have a life insurance.
Right.
What are some of the ways, if somebody died, let's say somebody died there, we don't know whether they have life insurance, how do we know they had life insurance? Do we call it different companies, or how do we go about that? Because I was been thinking about that, and I'm like, if I never told anybody have life insurance and I die today, is the company going to reach to the community? Like, how do they get that? How do you go about that, if you will, please?
So that's always doesn't have if someone has life insurance, somehow the community gets to know about it. Hopefully the beneficiary will tell the community, because of privacy. Once you've listed certain people as beneficiaries, the life insurance company is not obligated to tell anyone else that you had life insurance when you pass away. So that's private information. That's you didn't list on there that I want the community to know I had.
So
life
what you're
insurance.
telling me is very important. When you go and buy life insurance, you have to have a beneficiary.
Yes.
It's very, very important to have somebody just there to be contacted, just in case you die.
Yeah, absolutely, because the beneficiary is the one who gets the money. So if you buy life insurance and not have any beneficiary, someone to be contacted, then they won't have anywhere to send those funds to. So you want to have your loved ones, the people who will take care of your final expenses, the people who will take care of the remaining bills, take care of the other obligations left behind, your kids and stuff. So you want someone who you trust, someone you love, someone who has your best interest at heart to get that check and take care of whatever you want taken care of.
That's good. Yeah. Can you walk me through, if I come to your office today and I need a life insurance, how do I go about it? Can you walk me through the process, what I need? What I need to produce, what I need for the life insurance process, from the start to finish, if you can just explain to the viewers.
Okay.
Please,
Okay. Yeah, so my office is on I-35 and 635. So let's say you're coming, you get into my office. Welcome, George. So we sit down and we look at your options. We have what we call benefit analysis. We go through your situation. The main thing we're looking for is what you'd want taken care of by your life insurance. So and all that drives towards figuring out how much of a benefit you need, how much of a death benefit, how much coverage you need. It could be 100,000 might be enough for you, 500,000, $1 million, could be $2 million. So we sit down and figure out what kind of an amount is good enough for you to cover you. And then we look at the other different options. So we look at a term. Would a term fit your needs? If it doesn't, then we look at a permanent. Would a permanent fit your needs? If you decide that, cash value is more important to you than just a straight death benefit, then we'll look more at the cash value plans. Now, being an independent broker, we have many carriers, many companies that we look at. So we look at different companies, we see the advantages of every company, their disadvantages. Then, we analyze everything together, and then I lay it down for you. Then you kind of tell me, which way you want to go.
Okay. The next question I have for you is: do all the life insurances require the medical examination?
No, not all of them.
Okay.
The vast majority of them do require medical examination, but now we have we have some good carriers. Used to be that first of all, not all of them have always required the medical examination, but they will charge you more if you decide not to do the medical examination. So now we have some carriers that will give you the same rate whether you get the medical examination or not. Now the only thing they will do, they will look at your the other ways of pulling up your records. For instance, if you've had a big diagnosis or you take certain prescriptions regularly, they'll show up on your medical records. They'll show up on your prescription. Something you have been prescribed will show up on your records. So if they pull up your records and everything comes out clean, there's nothing that they can, that could make them feel that they need to do a medical exam on you. They'll just, give you a plan without a medical exam, and you still get the same rates as someone who do a medical exam. Now, if they pull your record, your public records or your records that you've authorized them to pull, like your Medical Information Bureau, they call it the MIB, or your pharmacy records to see what kind of prescriptions you're taking. If they pull them and they see something questionable, then they might order a medical record on you just to see, if there is something that, maybe something shows up on your blood work, something shows up in your urine, that kind of thing.
Can you also explain to the viewers, like somebody who smoke versus non-smokers, somebody who is drink, somebody who live in a different location, like high crime areas? The premium is gonna be always high for those kind of people who maybe they don't live like the best of the life, like anybody else?
Yes, because they look at mortality tables. It's actuarial tables that they will look at and see, a person, a 35-year-old lady in this zip code is more likely to die than a 35-year-old lady in this zip code.
And you say it's called what? Mortality?
Your mortality or the actuarial tables.
Okay.
So everything is numbers. It's all numbers. They'll also look at a non-smoker. Non-smokers pay more also, because if you smoke, you're more likely to pass away sooner than someone who doesn't smoke.
Yes.
Yeah. So drinking usually is not an issue unless your alcoholic drinks, unless it causes you to get other things. For instance, if you have DUIs on your records, then you'll end up paying more. But if you're just an occasional drinker, you're just someone who drinks friendly drinking, that does not affect it at all.
Okay, what about the race and gender?
Race, gender, race is not a factor. Race should never be a factor. In fact, you don't fill out your race on there. Gender is, because ladies, you ladies out there, you pay less. The ladies pay less.
I didn't even know that.
Yeah, the ladies pay less, comparatively. So if it's a 40-year-old lady versus a 40-year-old man, they say that the ladies live longer than the men. So they are more likely to not die sooner. So the insurance company is less likely to pay up on the lady. So the lady's coverage is cheaper.
I'm also curious with the type of job you work. We have so many people who drive trucks, especially here in the United States. Do they tend to charge, the premium is going to be high for somebody who drive a truck, rather than somebody who work in the office?
For truck drivers, used to be that they were paying more. But now more and more, because of the safety and all that, people end up living longer even when you're truck drivers. It doesn't matter if you're a truck driver. Now there are certain jobs that they still end up charging them more. For instance, miners, people who do let's say you do scuba diving as a trainer or something like that as a job, then you'll be charged more for that. But usually for our people who are mostly truck drivers, no, you don't get charged extra just because of your profession as a truck driver.
Okay, talk a little bit more with people with the pre-existing conditions, like people who have cancer, pre-existing condition, you may have. Obviously, the premium is going to be high, but how do you go about that? Yeah.
So what we do is that, and being an independent broker, being that we have many carriers. There are certain carriers that would just outright reject someone with a pre-existing condition. So we look for carriers that will cover you. Yes, you'll pay more compared to someone who doesn't have, any of those pre-existing conditions. But, it does not mean you shouldn't get the coverage. Now, something like cancer, they'll look at how long ago you had it, and are you in remission? Are you cancer-free? What stage you're in? But there's coverage for everyone. People shouldn't say, because I have this disease, I don't qualify. There's coverage for everyone. The prices might be different, the coverage might be different, but you still get someone who will cover you. They might not give you, say, 100,000. They might say, hey, you're starting out, we'll probably cover you for 20,000, see how things go. Then if everything turns out okay, then you can increase your coverage.
Yeah, so you hear there, people like, even if you have a pre-existing condition, there's still a coverage for you. So you don't have to say you're not going to get a life insurance just because you have like certain kind of disease. So there's an option for you. So that's a good thing about it.
Yes.
Let's talk about the children life insurance. This is huge because we're still trying to debunk this myth.
Right.
Like, why would you even insure your child?
Yeah.
Why would you have a life insurance for a child?
Yes.
Yeah.
It's because, unfortunately, even our children end up passing away. And it's good to have coverage for them in case, they end up, passing prematurely, which that's what life insurance is all about. Now, the good thing about coverage for children is that you have two ways of doing it. You can get a plan directly for them, which the best plan if you're to get for a child would be one that has cash value, because they're so young, their coverage is so cheap. Because obviously kids are known to live a long, they have much longer life to live, so their coverage is cheap, and the cash value plans you can use that money for various options. For instance, one of the options of saving for your kids' college is a 529 plan.
Yes.
But another popular plan is a life insurance plan.
I didn't even know that.
Yeah.
Wow, that's amazing.
With
I
cash
didn't even
value.
know that. Yeah.
Yeah, because what happens is you put money in there. Every month, the money grows. When they get to the age of 18, it's time for them to go to college. They can withdraw that money and pay for their college education. And then that plan is good because it's not just, the money cannot just be used for college. So for instance, they get a scholarship, for a 529 plan, they have a lot of restrictions. Cannot be used for the college. For the college.
Yeah.
So in this case, they can use that money for whatever they want. If they get a scholarship and they'll never need that money, then they can use that money for house down payment. They can use that money for in case they get an illness.
Wow, that is amazing. I didn't even know that.
And then if that plan is structured correctly, they can even use that plan to be their retirement. To where when they get to 65, they have like $1 million, $2 million, depending on how. And maybe you're just putting in maybe a couple hundred a month.
Oh my God! Based with what you told me, I don't even know why anybody would never insure their children, because I think the benefits is just humongous.
Very humongous.
And I was reading somewhere, I don't know whether this is true. Can you also borrow the money from the policy, like
yes.
for the
which is
college.
What you're doing when you're withdrawing that money, you're borrowing it from there. You're getting a loan on your own money. That's why some people will call it banking on yourself. You've had some people say being your own banker.
Yes.
So the money that you've been putting in every month is accumulating. It's growing on the on an index fund in most cases. So it's growing maybe on the S&P 500. Maybe it's going at a clip of 8%, 10%, or whatever the plan is structured at. And then when you get to the right age, they can borrow that money for whatever reason, for college education, for buying a car, for buying a home, for gifting a friend. That's their money. It's accessible to them.
It's good you came over, because this is a huge information. I didn't even know when you have like life insurance for a kid, you can even borrow money for it.
Yes.
You can even, the kid can use that money for even like their own retirement. That's huge.
Yes, it is.
I never thought about it, because always time I think about life insurance is about, I'm gonna die, my kid is gonna die, we need the money for the funeral, and that's about it. It's bigger than that.
It's much bigger than that. And because life insurance has its own advantages, the money that they borrow, that they take out, you take it out tax free. If you try to borrow money from your 401k now, you get penalized. You get hit with you pay taxes on it, and then you pay a 10% penalty because you've accessed it before your retirement age. This money here, when you take it out, there's no taxes, because you're borrowing your own money. There's no taxes and there's no penalty.
Oh, okay.
Yeah.
The next question, I don't know whether you have any legal abiding contract with any company. Can you recommend some of the companies out there who have the best rates for their life insurance?
Yeah, it's always hard for us to recommend companies. Now, I work with many companies, you know,
Okay.
all the companies you've had, the independent companies, and every company is different for every person. So we don't like naming companies,
Okay.
but you know, when we sit down with a client on a one-on-one basis, because what works for you might not work for the next
Exactly.
person. Yeah, but there are many good companies. What matters is how they structure it. If you structure your plan correctly, then it can fit your needs, you know, in a much better way.
Okay, let's talk about the benevolence. This is
Right.
huge. Yeah,
Uh-huh.
we have so many benevolence funds,
Yeah.
and I happen to be. I think Louis Declaration they have one. I mean Louis Declaration, but I'm not in a benevolence fund.
You need to join it.
Yeah, but is benevolence fund enough? Can it suffice life insurance?
Benevolence fund is a good start. It's a very good start. That's what I tell
Yeah.
people. But it's not enough, because the only amount that they'll pay, most of the benevolence funds, there might be some out there, but most of them will probably pay, you know, $5,000, $8,000, $10,000. That's not enough money in case you're not there. I mean,
Yeah.
if you're gone, your mortgage itself, you know, is probably more than $1,000 a month. So that won't even last a year. So it's good to have a benevolent fund, but you need to get something extra. In fact, the one that you mentioned, LD, Louisville Declaration, their leadership is working on a plan where you have to get
Life insurance?
Life insurance.
Oh,
That,
wow.
you know, for you,
That's great.
on top of you being a member of the benevolent fund, you also have to get coverage, your own private coverage, so that it protects you and your family. And that's great, because if you're a member of a fund like that, it fits best when, you know, your mom passes away in Kenya. They give you money to go, you know, bury her, put her to rest, or your brother or your any other relative. It's great in that regard. But for you, it's not enough. It does not cover much. So it's a good start, yes, but we need people to get extra coverage. And I really applaud Louisville Declaration for the fact
Yes,
that
it's a good-
yeah, they've said that
really good.
every member
Should have.
should have their own
Life
life insurance,
insurance.
because you know, we don't want to a situation where, you know, we have David comes in, he's passed away, he was a member of our benevolence fund. We give the wife $10,000, and you know, he has 3 kids, 2 kids, 1 kid, it doesn't matter. That's not enough to cover much. So we'll also feel indebted after we give them that money to continue supporting them, because that was our brother. So to help alleviate that, life insurance is needed. People need to get life insurance, because on top of that, it has other advantages that, you know, the cash value will grow. You can use that money later for whatever else you need. Anything could happen with the benevolent fund and you end up leaving it, then, you know, you still have your own private plan.
Okay, so you're telling, like, what you're saying is, like, if most people join life insurance, they buy the life insurance, we wouldn't be having all these, the Go Fund we have to do almost on 99% of people who die here in the US. We're not going to have all these harambes that we do people to ship the bodies back home. So I think what you're telling me is, like, the life insurance will ease that burden from the people's hand if you buy the life insurance. So the more people that have life insurance, the better, because you know you're not gonna need that Go Fund,
Exactly.
or like a Harambe to ship your remains back home.
Yes.
Is that you?
That's exactly what we are saying, and that's a good point you've made, George. And to add on to that, you know, we'll still come and pray for you, pray for your family that has left, but we don't have that financial pressure, you know, to raise the 10, 15,000 to, you know, bury you.
Exactly.
The life insurance takes care of that. And also, that money, that extra money that comes in, it goes a much longer way to support your loved ones when you're no longer there. So if you come and raise 15,000, that's great. We'll put you down 6 feet under. But what about the rest of the family? You know, if you have a spouse, your spouse is having to hustle to go back to work. We've had instances where people lose their house because, I mean, they can't keep up the mortgage payment. They end up losing the house. They're having to rent or live in with other people. The kids have to change schools. I mean, life is flipped upside down. Now, yes, they've missed you. You can never be replaced. But the fact that the financial aspect of it has been taken care of, the house is paid off, the car is paid off, no more bills, everything is paid off. You just have the recurring, you know, phone bills and all that. It's great for us. Next point, as far as the community is concerned, is the money that we end up spending, because when someone passes away, we are forced to contribute so much money.
Exactly.
We're having to pay $100, $200.
$200.
It for a different reason. I could invest that money somewhere else and it could grow.
Exactly.
Now, yes, we'll still come and support you, but when we don't have that financial pressure, we'll come and do, $10, $20 to help pay for the tea, for the tea, for the meal.
Ticket.
For the ticket. For the ticket. The life insurance has taken care of the big portion of the needs that are left when that person passes away. And in another point is that the money that we end up making, the money that the beneficiary ends up getting, let's say they had $500,000. Well, that $500,000 is money that is in our community. Yes, the family is the beneficiary, they get that money, but that money grows, it starts circulating within our community. Can you imagine, because we're all going to end up passing away, but as we start passing away, a lot of our people have coverage. They have, $500,000, $1 million, or even 100,000. That's money that our community is being left behind. Our kids' futures are left on a very good trajectory because their college has been paid for.
Exactly.
They still end up going in good schools, because if you're in a good neighborhood, your kids go to a good school, you end up losing that house. You start looking for a place that is affordable. In most cases, probably won't be the best schools. So, you're changing the trajectory of our community for the future generations to come, many, many years to come. We can alter that ourselves if we all end up getting the right coverage.
So what you're telling me, like in a simple terms, is like benevolence is pretty much like a funeral fund. And that's about it. You just go home, we bury you, and that's it. End of it.
Yeah,
nothing else.
End of it. Yeah, what happens to the kids? What happens to the spouse?
Or even the
spouse
parents.
is having, he or she is feeling bad enough that they've lost you, but what about the financial pressure that is there?
Wow, so the next question is, how do we help each other in the community to increase the number of the life insurances coverage?
That's a good question, very good question, and I'm glad you've asked that, and this is a good start.
Yes.
Us coming and talking about it, there are many things you could be talking about. Yeah. You could be talking about politics in Kenya.
Exactly, but this is the stuff that really matters.
Exactly. This is what matters to us.
Everybody needs it, So,
Yeah, so this is a good start. And it's, the listeners, people watching it, share, let other people know.
Share the video. Know about the life insurance.
Exactly.
This is important. This is one of the top, maybe on a top 3 things you should have.
Exactly.
Anybody should have.
Yeah.
The health insurance, life insurance.
Yes.
You should have those.
Yes. So and I'm glad you mentioned that, because part of a good financial plan is what you start with your base, your security. When you're building your house, you start with your foundation. You have to have a strong foundation. So insurance is part of you. When it's your financial plan, you're planning for your good financial future, your retirement. You want to retirement good. You want to have financial freedom to where you have enough money. You don't have to work. You can enjoy life, travel as much as you want. You have to have a good base. It starts with health insurance, life insurance, disability insurance. So all that is needed before you start investing in anything else. Before you start buying shamba nyumbani, before you start investing in real estate, protect what matters the most. Because what happens? Yeah, you gotta have. Because what happens is, you're going to buy plots, and then something happens to you. First of all, they probably don't even know where your plots are. You end up losing them, or you get sick and you don't have money to take care of you. You're having to sell your plots, sell your real estate, sell your land, whatever you have, at a throwaway price, so that you can take care of needs that insurance would have taken care of. So insurance is on the base. Get your insurance covered, your health insurance, your life insurance. Take care of that. That way you can invest in a plan. Everything works in a plan. You have to have a good plan, and the plan has to start with the foundation.
Yeah, and I always say this: if I, like my house, I pay for the insurance every month.
Right.
The car, I have never lived like even a single day without paying for the car insurance.
Right.
What about your body? Your body, you should treat it as a property.
Exactly.
It's very precious. Why don't you have a life insurance for your body?
Yeah.
You're working so hard, you don't even have life insurance for your body, which is, you're working, it's your body.
Yes.
And yet you're paying all these thousands of money for the houses, for the car, or even sending this money home. And life insurance is not that expensive.
It's not.
I'm telling you guys, it's not very expensive.
Man,
it's actually very, very, very cheap.
Man, you actually you're doing a better job than me explaining the need of it. Looks like you can be an agent also.
I might be. Maybe that's my future career.
You never know.
You never know.
Yeah, but that's a perfect point that you've just made. Everyone pays insurance on their car, on their home,
God, yes.
renters,
And
even on their
cheap.
phone. People have insurance insurance on their phone.
For the phone. I'm like, what the heck?
But they don't have life insurance. I mean, it's ridiculous. What matters to you the most? Is it your assets or your life?
And everybody who's watching this video, call Pato today. You gotta have life insurance for yourself or for your kids. It's not an excuse.
No.
Today you gotta have it.
You have to have it.
You have to have life insurance, and especially the community is getting bigger and bigger. And this death, we have somebody dying. Like, sorry to say this. Almost every month somebody's dying because as community grow, we people have like more people here, and people they're gonna die pretty much every month, every other week, you know, and it's gonna be a burden for us to pay all these money for all this money to be exported, but back home. So everybody need life insurance, please. And I'm saying this. Everybody. So I'm gonna leave the contact here for Pato. Everybody should call him, and you have to have life insurance. The other thing I was gonna ask Pato is it always good to be honest with your health? Let's say, because people they are afraid to disclose their health conditions. I'm going to ask for the life insurance, and I have pre-existing condition. I don't say. Is it always good thing to disclose my health status before I even come to you and get that quote?
Now it's good to disclose it to your agent so that your agent can figure out the best company to place you with, the best product to put you with, and also the worst thing to do is to not disclose it and then they find out about it. Because somehow they'll find out if you've been treated for something major. Like I was saying earlier, they'll find it on your medical information bureau because they share this information. If you have a prescription that you're taking, more likely than not,
it's not in the system.
It's in the system. It's in the system. So it's good to disclose it. And I always use an example where, for instance, someone you have an accident, just something small, nothing major, and then you have a small blood clot. That blood clot, you take a blood thinner. Just so that it does, the clot does not move up. And for just a short period of time, and it goes away. It's nothing. But you don't disclose that you're taking a thinner for that. When they pull your records, they'll see it. They'll see it. And yet they ask you, hey, are you taking any medication? You say no. But yet the medication, the reason you're taking the medication is nothing major. It's just for the very temporary. It's going to go away. So if you disclose it, and put on the notes on there that, yes, I'm taking a blood thinner because I have a small
one reason or another.
Because I had a small accident. When the underwriter looks at it, they're going to say, oh, okay. Then
and the system has become very sophisticated because all these systems are connected together. They sell information to one another. So I think it's always good to be honest with your any condition that you have.
Right. Because companies look at every situation differently. One company might be good for this condition, another one might be better for this condition. That's why I always say it's good to let the agent know, and then they can figure out the best option for you based on what's going to end up helping you better to take care of you.
Do you can you tell us like how does the compensation works? Because we have so many people who die here, and we need money to ship the remains back home. Does the insurance company maybe take like a week, 2 weeks, a month just to compensate for even to get like even that 20,000 to just to send the remains back home? How does the compensation works for the life insurance?
It's very fast, very, very fast. The good thing about life insurance here in the US is that as soon as they get the death certificate, then they issue the payment.
And they come within days?
Within days. I've had cases of it's 3 business days. Wow. Now, they usually tell us a week. A week is what they would say. But you see instances where sooner. 3 business days, you have your check.
Oh, okay.
You have the money deposited in your account, whichever way you want to do it.
And for the compensation in Kenya, I'm single here. I don't know anybody here. Like my parents are back home. They're beneficiary. How do they compensate? Do you know how they compensate that? Do they send a lump sum check?
Yes.
Do they wire to the bank account, or how does the compensation go up?
Now, the most common one is a check. They will send them a lump sum check, which in all cases, other than in very special cases where you might want the money annuitized, that you want to take it monthly. In most cases, even when you're here, they give you a lump sum. So if you had a benefit of 500,000,
they give you 500,000.
Bam, 500,000.
And it's tax free or
tax free? Life insurance money is never taxed.
Wow.
Yeah, death benefit life insurance is never taxed.
That is crazy.
Yeah,
I don't know why anybody would never get life insurance.
That's why
that's
even it gets to a point where the wealthy use life insurance as a way of evading taxes, and also as a way of part of their financial planning. I think that's the best way of putting it, because of the tax benefits that you get from life insurance.
Okay, you have said you're an independent agent. Tell the viewers where you're located, how they can get you, the phone number, whether you have any website, because I think you have given like wonderful information, and my viewers, I'm sure they're gonna be looking forward to come maybe and see you for the life insurance.
Yes. So I'm located on 2727 LBJ Parkway, Dallas, Texas. So it's the intersection of 635 and I-35. So, but call me at 972-859-0191. That's the best number to reach me. 972-859-0191. We give free quotes, free estimates, free consultation. If all you want to do is bounce a few ideas, then just call me. We'll talk it over. No pressure sales. I don't try to push people to.
And what I want to say is this: you might get a quote which is like above your budget. Yeah. But it's always good to get something better than nothing.
Exactly.
Even if you get a quote for like $200, you'd rather get for $30. It's better than having nothing.
Yes.
So even if you go and get a quote and they tell you, oh, this is what you need for your plan and your condition right now, it's even good to get like even for $30 or like for $17 or whatever you want to get, rather than saying, oh, it's too expensive, I'm not going to pay for it. So I think there you have it, people. I have Patrick here. You have his information, and I'm going to share the information on our Prudential's page. If you haven't liked our page, Prudential's, please go like that page, because we're going to be streaming our videos of the Prudential's page. Like it. Yeah, so any closing thoughts, Patrick, you want to say about the life insurance?
I'm going to close exactly on what you just said, that the rates are affordable. Everyone out to have it. Now, even the people who are in their later years, you say you have parents who are here, or even their parents are watching, maybe you're in your 50s, your 60s, even that we have plans that you can get that are affordable. But everyone needs to have the coverage. If let's say you wanted a cash value, but all you can afford is the amounts that you've just stated, $20, $30. You wanted to get a cash value that would cost maybe $200, but you can't afford it right now. You can get a term, get something that will cover you for the time being. When your condition improves, then we can get a cash value, a plan that will cost more, that has more benefits for you. But yes, everyone needs the coverage. It's much more affordable. And this is the youngest you'll ever be. Yeah, so today, tomorrow you're going to be a day older.
A day older.
Next month you'll be a month older. Yes. Next year you'll be a year older. So this is the youngest you'll ever be. Get it as soon as you're able to. Call me. We do a free consultation. We'll run the numbers for you. And if you belong to a group, and the group, maybe you have a group that would want to have someone come and talk to them about getting enrolled, then we do that. We come out there and talk to your groups, make sure people have the coverage. Because remember, when something like when such a situation happens, a calamity happens to your friends, to your family members, guess what? The closest people are the ones who are the most affected. Other than their family members, the spouses, the kids, your closest friends. George, you have a close friend. If something happens to them, then you have a big burden. You feel that you need to take care of their kids. You feel that you need to take care of their families. So we have a lot of groups that we have around. I always tell those groups, make sure that everyone within your group is covered. Because when they're covered, you're all covered. When one of you is not covered, you're all not covered. So make sure that everyone within the group is covered. And that's how we'll end up all being covered as a community. Small groups being covered, small families being covered. Everyone ends up being covered. And in the long run, we all ends up being financially secure. We have enough wealth within amongst ourselves. We need to grow as a community to a point where we are getting to we're making good situations, good financial decisions, and this is a good start for us all.
Yeah, and also Patrick Nganga, he's a specialist in Affordable Care Act, which is also known as Obamacare. The open enrollment is in November.
November 1st.
Would you come back and talk about the Obamacare?
I would love it. I love it.
Like end of November, I'm gonna bring him back. We're gonna be talking about the Obamacare. Those people who doesn't have the health insurance, this is your best time to know like the best tips how to get the Affordable Care Act. So
Yes.
we're gonna read some of the comments because there are some people who just commented.
Okay.
And he might wanna read your comments. So we're gonna do that and we're gonna close up so pretty quick. So thank you guys for watching.
Thank you so much.
Thank you so much,
everyone.
Yeah. Can you ensure if your kids have 4 of them in one premium, like a group and not an individual? That's a good question.
Yes, you can do. Yeah. Actually, one of the things I did mention was that, like you, George, you can get a plan, a life insurance plan, and then put your kids under your plan.
Oh,
What they call as a child rider, your children rider, and that rider covers all your kids. So you could have, 3 kids, 5 kids, 10 kids. You can all get them all covered under your plan. But if you want to get the cash value, the one we talked about, college funding and all that, then you might end up getting individually for them. But a good start would be exactly what you're asking. Get one for the parents and then get the kids insured as all kids insured under your plan.
Okay, there you have it, Jimmy Cash.
Good question.
Good question. The other thing I was gonna say here, Daniel Thuo, very here in US. Yes, I agree.
Power. We need that power within our community.
Beria Chapa, thank you for your input, for even sharing Patrick's phone number. I see you have shared the phone number over there.
Oh, thank you,
Thank
Betty.
you so much.
Betty.
Yeah. And somebody else here, Jimmy Cash. Can you share his contacts? If you don't mind, your phone number again.
Yes, my phone number, my office phone number 972-859-0191. You can call that number or text me. That also has WhatsApp, so a lot of people like to communicate through WhatsApp. So call that number, text, or WhatsApp 972-859-0191.
Okay, there you have it, Jimmy Cash. Let's see my cousin there, Zach. Good information, George and Pato. Thank you.
Thank you.
Yeah, Betty, thank you for sharing the contact.
Thank you.
Somebody else here. Neil, that's my schoolmate. Thank you very much for information. Very informative. Mungai, that's from the guy from OKC.
Okay.
Yeah. And Murefu, especially if you have a family, life insurance is very important.
With that. Good point.
Tony Odeng, good discussion.
Hey, Tony.
Yeah, Tony. Judy Warui, awesome information. Life insurance is a must. I agree with that.
Yeah, must have.
Yeah. And somebody, Anne Murefu with the internet here.
Yeah.
And get this life insurance early. Don't wait until after you're 40. Chances of medical issues.
I didn't even address that, but she's made a very good point because, I was going to say something about the people who have work life insurance.
Yes,
the work life insurance is good. It's a good start. But the problem happens is that when you leave your job, you lose that coverage.
Yes.
Secondly, when you leave your job and you're trying to get coverage at that time, you might be uninsurable. It might be too expensive.
Exactly.
So that's why I tell people, even if you have insurance through your place of work, get your own private coverage, lock in the low rates, and then you're still insured, you're still able to get good rates because you're healthier. If you end up losing your job later, and maybe you have gotten a condition just like you've mentioned, then it's going to cost you much more, or even you might not even be able to afford it or even get it. You'll be declined.
That's good. That's good. Phone number, you already given that, Judy Gishire.
Yes.
You already did that. Okay. I know the music was too loud. Yeah,
okay.
so we're going to add up that.
Loved it.
Really nice.
Yes.
So, guys, I'm going to share his information on the Prudential's page and my page as well. His contact form information. I'm going to bring him back end of October or early November. We're going to talk about Affordable Care Act, which is Obama Act.
So thank you guys. It's still the law of the land. They want to take it away from us, but still the law of the land.
Yeah, so guys, have a good night, okay?
All right.
Thank you for tuning in, Prudential.
Thank you.